The first rates then this Tuesday morning on our screens indicating of a bit of a quiet start. Having said that, we managed to push it to that 9800 mark yesterday intraday. So let's see where we really go from there. It is a quiet start. You know, it's nowhere close to what we've been used to seeing all of last week. But there we are. The breath, of course, is open positive. The Nifty starts off at 9860, so not bad. We managed to inch up all the way to that 9850 level. Kotak, and that's got to be the stock in focus. Uday Kotak is now seeking up to $920 million in the Mahindra Bank share sale. It seems that Kotak has offered Mahindra Bank shares at 1215 to 1240 rupees each. That is what the terms seem to be indicating. And that's an offer of up to 56 million Kotak Mahindra Bank shares. That's what the terms are indicating. It's a 5% gap up start, no less, for Kotak Bank. While we're on Kotak Bank, I also want to check in on what the other financials are up to. Because remember, be it the 6% rally that played out last week, or for that matter, even that 3.5% move yesterday, that was indeed driven by financials. You can't do it solo without the participation of financials. Just quickly, Bajaj Finance, the biggest mover from yesterday, that should come up for you on your screens next. Bajaj Finserv held out very smartly. You had a big move on SBI as well. So HDFC Bank has petered down a wee bit, as I can see on the screens. I just want to quickly check in on what Britannia as well is up to. This is going to be an important one in terms of the kind of commentary that you may see. Then, of course, you've also got some of the auto sales, which the street is going to be reacting to today. Eicher Motors, they reported motorcycle sales for the month of May, and that stood at 19,113 units. So May sales are down about almost 69% overall. TVS Motors, the vehicle sales came in at about 58,900 thereabouts. This is starkly lower than what the street was anticipating. Ashok Leyland, the expectation was about 1,000 odd units. They've actually done better. 1,420 units is what they've managed to clock in the month of May. Also remember, you've already been seeing some buying come in most of these auto majors from the lows. So look out for that. So I think one can safely say it is a tentative start. It's a quiet one. You've got the broader market, which is actually outperforming the benchmark indexes. And clearly that Moody's downgrade, for now at least, is something that the street has completely ignored. We caught up on steam from last week. We caught up yesterday. And today, we're trying to push up, or at least stay put at that mark as much as we can. Britannia is going to be important today. You've got Interglobe Aviation as well coming out with the numbers. This is going to be very critical, the commentary. And then Motherson Sumi as well, purely because it being a momentum stock, this is going to be critical too. Also, I want to look out for Bharti Infratel. This has been pretty active of late. Now with that CLSA upgrade as well coming in the stock with price target to 265, this is also going to be important. Not bad overall, you'd have to say, for the index. It's managing to hold through, if not build on to where we left it off yesterday.
Not the big draw for me, Aisha, because I again would like to go back to pharma as a category, telecom as a subsector. You got a lot of these survivors, you know, when I say the so-called crisis survivors, like in Indian Hotels, Quest Corp. So, you know, I think it is very important for us to again and again flag off that in this crisis, not everybody will survive. Very few will survive, but those who will survive, they will thrive if their businesses are good. And I think that's where I think the smart money now seems to be, you know, moving in, whether it's a hotel stock or a Quest Corp, or the kind of, comeback what we've seen in some of the pharma names. Consumers, well, they've been fat and obese. But when markets are looking for safety, you can't complain. Kenneth Andraja joins us now. He's been interacting with him after a while. Ken, fantastic to have you back. Thank you for joining us. Hope all's well and things are fine with your family in Canada and your daughters are doing fine.
All perfectly well, Nikunj. Trust all the same with you.
Thank you very much, Ken. So, what's your market view? The space where you invest, which is the small and the mid-cap space, has got completely smashed out of shape. It could happen because of market, it could happen because of liquidity, but that's the space where you expertise on. That's the pitch where you bat. So how are you dealing with this market googly for that space?
Sure, it's been a very long time since I've seen something like this. And actually, I haven't seen something like this, which essentially started out in the beginning of 2018, and we're almost midway to 2020. but there is some revival that's happening across the board. A lot of businesses have restructured themselves, and they've become very averse to picking up incremental amount of debt. So I think balance sheets are corrected. Balance sheets corrected in 2019, and they're seeing an incremental correction in 2020. And I think you're way past the risk zone as far as that part of the world is concerned. Sure, there's been an impact on pricing that is there, but that impact on pricing over the last quarter has been across the entire market itself. These companies or the mid-market companies have been in the bear market since 2018 or beginning of late 2017, beginning 2018. My sense is a lot of them are bouncing back purely based on asset valuations on the ground and nothing more. But if the economy actually holds up and there's some element of fragmentation that takes place, then these guys will come back.
Ken, you've run a portfolio, and I distinctly remember when we spoke, is that you got almost zero exposure to financials and a very large exposure to agri. Now you underperformed for the better part of 2019 because financial is where all the party and all the fun and all the glory was there. But now financials are underperforming and rural economy is making a comeback. So are you in a good spot now, considering that everybody is talking about buying rural and selling financials?
It's too recent to talk about. And even if it's doing well, there's a lot to catch up on 2019. But yes, 2019 we were out of two spaces, which was consumption and financials. And actually both of them were playing the same cycle because private sector financials were up, NBFCs were up, and consumer businesses were up. So anything from discretionary spends, which is automotive, jewelry, retailing, etc., to FMCGs and the likes of them, both were up. So you were playing a leverage trade on the consumer cycle, and that J curve in consumption happened towards the lag end of this decade, and that's what we stayed out of. So in a sense, the decade that went by was all about financials that or the leverage play on the consumer cycle, and you saw a magnification of that in some of the financial stocks that were there. So yes, 2019 we were out. We held on to where we were investing in a little bit of infrastructure that never played out. The agri part of the entire portfolio, which has done reasonably well. Some of them are at lifetime highs, and we're looking forward to manufacturing and some of the basic commodity businesses or basic utility businesses that exist in India.